Good evening, traders. Today is Tuesday, March 28th. Would you like to see the market maker's master plan? You are looking at it right now. This is SPY Futures ES 1 hour chart. Upper left hand corner right here, February 16th. We are in a rising wedge, guys, right there. 1 hour chart, look at that. And that is where we are right now. Tonight, right there. The bounce this afternoon was right here. Let me zoom on in just so you can get a better look at this. Right there. When we bottomed, we then had that, what I call, impulsive move up right there. Okay? So we are literally at this wedge top that goes all the way back to February 16th. Tonight, right now, as I am speaking, begs the question, what's the next move then? What will tomorrow morning look like? What will, well, as we like to call on Twitter, the backstage after party? What we're referring to is 2 a.m. to 5 a.m. tonight. That's when all the shenanigans happen. What will that look like? Nobody really knows. But what was unexpected was this impulsive move up this afternoon to close the day. But now when you look at it in the context of the wedge, that actually makes sense, doesn't it? Just like this impulsive move up along the wedge top and then down. Up along the wedge top and then down. Is that the next move? I think it should be. I don't think it's going to be a breakout, because why would you break out on a Wednesday before you have CPI and all that? That doesn't make sense. That's too early to be breaking out of a wedge when you don't have a catalyst yet, right? CPI and that sort of thing coming up on Friday. Okay, so there's the master plan, guys. This is SPY, not futures. This is SPY. This is the same equivalent pink wedge top that goes all the way back to February 16th. And as you know, extended hour stops at 8 p.m. Eastern time, so it stopped right there. But that makes sense because look right there. Look at that wedge top, the pink line. Zoom on in so you can see. Right? I have a feeling tomorrow we're going to end up somewhere right there. Is it going to be a gap and crap? We're going to gap up tomorrow? See what I mean? I don't know. We're going to find out. But yeah, this move right here in the afternoon, right here, boop, this one surprised me because I actually started getting puts. And you'll see that in the tweets momentarily. Yeah, I was getting puts. I'm like, nah, I think this is going lower. So ultimately what I think it's doing, came up, hit resistance, right? Boom, came down. Came up, I think it's going to hit resistance, and I think the next move is going to be down. Because, well, why are you going to break out of this wedge now, early in the week, without a catalyst? See what I mean? And just looking at the basic rules of retracement, based off what I saw today on the 65-minute MACD, which is actually further down, right here, down here, yeah, see? I expected more retracement than this. I didn't expect this to curl up so soon. I expected more retracement closer to down here, because usually you're going to get at least a 90% retracement. But it curled up. And where it's going is up to the wedge top right there. And I think like it found resistance here and here I think tomorrow it's going to find resistance again. Okay, so that is the secret of the market maker. Okay, let's get into some intraday tweets. I'm actually starting a little bit later right here this time. I didn't even cover all this because the move down, you know, this morning, actually that was expected. I didn't think it was just gonna rebound and go up. Okay, so I'm starting the tweets right here, right there. Okay, so that's where we're at. That's where I start talking about the 5-minute MACD is angling down below the 0 line, and the 65-minute is also angling below the 0 line, again, from a flattened position. So I don't show the 65-minute here, but I was just describing it real time. And so that's what ultimately caused this fall. The 65-minute angling below the 0 line from a flattened position. Okay, so as soon as that happens, that's no surprise that it's starting to fall right here. Boop, down you go. Okay, gotta let this play out. Actually, at this point, there was no confirmation of long or short at this moment right there. That would have been, yeah, right there. Okay. Okay, just the fact that it's under the EMA 50, then it's 100% chance under the MACD 0 line. And right, what I'm referring to is right here, is under the EMA 50 right there. And guess what? That's under the 0 line. Okay, the EMA 50 red line equals the MACD 0 line. Okay, that's a key observation. So, here's where you start seeing. You may need to think about getting some puts after all. See, already cluing in here. Notice the wick down from SMA 20 right here, wick down. So that would have been equivalent to right there. So at least that intuition when I talk about right here, may need to get some puts after all. That proved to be accurate. Okay, previous 65-minute candle has closed, and I'm talking about right here, right there. When I sent that tweet out, the previous 65-minute candle closed. Guess what? The MACD, it closed at negative 0.01, which is under the 0 line. And guess what? Scaling more puts, right? Let's see if it goes down from here. I suspect it will. As I sent that tweet out right there. Down we go. Okay. Basically, I'm pointing out all the patterns. Up arrow, and then basically the let's see, serving as resistance, the circles. Oh, okay. The EMA 50 was resistance in every case. Here, right, here, and then at all these contact points, you notice that they're wicking down as resistance. That's basically all I was just pointing out. Okay, and so yeah, scaling more puts. Scaling more puts. Okay, so okay. This would have been right there. Is that? Hold on a second. No, actually, when I saw it come up here, yeah, right, it would have been right here. See, I thought, okay, we're gonna scale some more puts. That's exactly what I was doing right here when I sent that tweet out. So, I mean, look at this. 5-minute MACD is too far below the 0 line. Right here. See, look at how far below the 0 line it is right there. See that? So, obviously, hindsight is 20/20. This was a last-minute pump, guys. And I'm going to show you a tweet in a moment that I was like, I was still suspicious, even though it took back. Actually, it technically didn't take back the EMA 50. It failed the back test right here at the end of the day. It failed it. See right there. But yet it came back up, took it, and then just blasted up. And so when you do that without back testing EMA 50, that's what I've called in the past. You're going to pay the piper. You're going to pay the piper. You're going to pay. Sooner or later, you're going to pay. You're going to come back down and test it. The reason why you didn't test it is because you know that if you did back test it, you're going to fail. That's why you don't test it. Because before that pump here, you already failed it right here. Okay? Let me just zoom in real fast so you could just see for illustration. Right there. You failed it. This candle right here failed. Then you came down and then you just pumped it up. You just ripped it up without back testing again. No, that's not how it works. That's what I'm talking about. You're going to pay the piper. I've said that in previous videos too, guys. For those of you who have watched previously, existing viewers. Okay, and the 65-minute is firmly below the zero and angling downward. It's not even trying to flatten out. I don't have a screenshot of it, but that's what it was doing at the time. So basically, this was a short squeeze. It was a short squeeze. Okay. Okay. Yeah, that you're right here. Would have been, yeah, right here. This last candle failed EMA back test. Let me see. Yeah, that's right. That's correct. Yep, it failed the back test. So, you know, it's amazing what a short squeeze can do. That's all I'm going to say. So, I'm just calling out. See, at this point right here, this would have been this go. Oh, this candle right here when I sent out that tweet. Now the pump passed EMA 50 into the close without backtesting it. We've seen this before. I'm getting puts at close. So I did get puts at close up here. So now we know, being futures, it keeps going up. But we now know that's at the top of the wedge. It's at the top of the wedge, as I showed you at the beginning of this episode. We're going to find out exactly what's going to happen tomorrow morning, aren't we? We're going to find out exactly what's going to happen at 2 a.m. to 5 a.m. this morning. That's when the shenanigans usually happen. I don't think it's just going to keep going up and up and up and up and up and up and up. Something's going to happen. I just don't know exactly how that's going to happen. Okay? So, all eyes on tomorrow. That's basically all I've got for you guys today. Please give this video a like, share, subscribe, or click to be notified when I release something new. With that, I'm Agent 00.